All right, hi everyone. Welcome to Synergy Traders number 52. This is the topic for this one is 30 experts' favorite indicators. So over 3 days, July 23rd, 24th, and 25th, we have 30 trading experts that will share all of their favorite indicators with you. So this event is brought to you by TradeOutLoud.com and TimingResearch.com. And of course, all of these presentations are for educational purposes only. Trading is not suitable for all people, so please consult a financial advisor and only trade with money you can afford to lose. Also, all of these sessions are being recorded individually, and those will be permanently made available on TimingResearch.com, as well as the Timing Research YouTube channel. And if you search for Timing Research on Substack or your favorite podcast app, you can find them there as well. So to open the day for us today, we have Michael Katz, and I'm going to go ahead and turn it over to him.
Thanks so much, David. How's it going, everybody? Welcome and good morning, afternoon, evening, wherever you're from. So just before diving in, I always like to get to know who's with me on the line. So if you can write in the chat, um, you know, what type of trading are you looking for? Are you trading stocks, or futures, options, forex? How long you've been doing that? Would be great just to get to know you and also understand better how to fit the content that I'm about to share with you today. So feel free to drop it in the chat, and we'll take it and we'll start this presentation. So when David approached me and said, let's do a presentation on indicators, the first thing that came in mind is obviously doing, for me, it was doing it on the MACD, the MACD. I'm guessing most of you are already familiar with that indicator. We will talk about it obviously later on, and then I will show you how I'm using it and how I created my own strategy with it to make it profitable. This is by far the most profitable strategy that I've been using for many years. And I'll show you why. And this is probably the most important element is before understanding or before trading any type of strategy, you want to understand why it works, why it should work, right? Because you can use any type of indicator or a naked chart, whatever you're using, doesn't matter which asset you're looking to trade. But eventually, the idea is first to understand why it should work. Once you get that, it's easier for you on the mental side and also on the technical side to really dive into that strategy and really give it a shot. Because I'll take you back, I'll tell you a little bit about my story, and then you can understand again the why and what's going on behind the scene that actually will help you get that even better. So currently I'm the CEO of TradeOutLoud. We are an online prop firm. We basically fund stock traders. So as a retail trader, you can come to us. Even if you don't have a lot of experience, you don't need to show us a portfolio of 3 or 5 years. It's online. You go through a process, evaluation phase, we call it. Once you pass the evaluation, we give you our own capital and you're basically risk-free, and we split the profit up to 80% to the trader. So I've been doing that for the last 2 years since we launched TradeOutLoud. Our parent company called the Fivers, it's a much bigger company, been around from 2016, and it's doing basically the same, but for Forex traders, not based in the US. But on the technical side on the trading side, let's say, I've been trading for the last 17 years, mostly stocks and futures. I've been also the head of the traders in one local shop here, a prop shop here in my location, and that we'll talk about it in a second. That got me obviously to the phase where I'm at right now, but also becoming a much more profitable trader than I was before. I've been dealing also with fintech and developing some apps and softwares in order to give more chance or more edge to the traders. One of them was one that I sold to that prop firm. It was basically a semi-automatic risk management, or actually trade management, where you put your entry and stop loss, and it does the rest for you. And besides that, on a personal level, I live in a small village. It's called the Moshav. Grow my vegetables, and I also like to climb. So let me know if you're into that as well. Okay, so my story goes, like I said, back 17 years ago. I started to trade just like anyone else, $10,000. Started day trading stocks. The broker was offshore, so the PDT rule didn't apply. And I couldn't find my way. Of course, back then, there wasn't a lot of those webinars as we do right now, or any YouTube, any YouTube lessons. Barely was. So in that case, I was pretty much all by myself. It took me a while, a few years, to get to the point where I feel comfortable and I actually trade in a profitable way. I developed a few strategies completely by myself, with the experience that I had, but it wasn't enough. So I had this a nice chunk that I made every month, but I knew that there is a bigger or higher level, right? I remember myself, just daydreaming about going to New York, to Wall Street, and find a market maker that will teach me all the secrets of the institutional traders. And back then, I didn't understand what I'm looking for exactly, but I knew that I want to go to that level of the institutional trading. One thing led to another. I developed that software that I mentioned, the semi-automatic trade management. I went to that local prop firm and basically wanted to sell them that software. A few days later, I basically jumped into an opportunity and joined that prop firm as the head of the traders. And then I realized what I'm missing in my trading. Again, I had a nice, good way of a retail trader of doing what I'm doing with great strategies, but I was missing the fact that only institutional traders have. And currently, I guess all the guys that are here basically doing it on the retail level. And on the institutional, when you're trying to compare between what we do on the retail traders compared to institutional traders, there are three major things that separate us apart. One is the capital. When I started, like I said, I started with $10,000. That's not really enough to trade with, because once you're in a trade and you want to get to another trade, in most cases, you won't have enough capital to trade with. And a lot of the times I entered a trade, there was another trade that I wanted to take, I couldn't. And the one that I was in lost money. The one that I was supposed to take made money. So I don't know if you experienced that before, but this is definitely something that I remember till this day, because it happened so many times that just the capital didn't give me that edge when it comes to my trading. So first of all, the capital. Institutional traders, that's what they have. A lot of capital to trade with. And once you have enough capital, you can play around and you have more flexibility in the market. You can make more money, so you feel like you're not wasting a lot of the hours sitting in front of the computer, learning a lot, and basically getting to the point when you're making $50 on a day instead of making 500 or 5,000 on a day. That's on the mental side of it, like the psychological side of trading. In that regards, it's super hard to continue to push yourself furthermore if you're only making $20, $50 in a trade or in a day. Comparing to when you're trading with large capital, you can actually make a few hundreds of thousands, and then it makes sense. Your mind is like saying, you know what, I need to put those hours in because I know what's the reward, right? So that first, something that I missed and only got when I reached that point when I'm trading with a prop firm. A second thing was not just the capital, but I'm actually not risking my own money, right? We all worked hard to save that money. And now that we're trading with it, then it's easier to lose it. And obviously the fear comes into play. So when you trade in the institutional traders, a market maker in most cases will trade also on his account, but also on her, but also capital that another fund, another company will share with him. And in that case, he's not risking his own money. It's much easier to commit to that trade. How many times you try to take a trade and you couldn't click the mouse key because you were too scared to click the mouse key because you don't want to lose that money, right? It probably happened to you like any other trader many times before. So once it's not your own capital that you're risking, you don't really care, not on the negative side, but actually on the best possible way, because your mind is detaching the money side, the money part from trading. And that's one of the biggest issues that any traders have, is that we need to focus on the logical side, on the decision making, the execution side, and not about, should I enter the trade because I'm going to lose money, or am I afraid to take that trade? So once you do that, you also, it's make it much easier to start trading and make it with a bigger, like I said, a bigger capital. And the last thing that we add on that prop firm compared to, or institutional traders have all the time compared to a retail trader, is the fact that they have risk mechanism that protect them from blowing the account. I'm guessing any one of us here in the room experienced that at least once. You enter a trade, you lose money, maybe 2 or 3 trades in a row, and then you know that you need to go away for that day, but for some reason, after a loss of $100 or 500, 1,000, you come to realize that you want to continue to trade in order to get back, right? Like a revenge trade. So once you're doing that, in most cases, you will go even lower than what you had. And this is the easiest way to blow your account. And a lot of traders across the world are doing that right now as we speak, just continuing to trade, although they know that they need to step away from the desk today. So when trading with a prop, you actually get risk limitations within the system, so built in within the system, that block you from continuing to trade. And that's one of the most beautiful things that the institutional traders have comparing to us as on the retail side. So those elements got me to a certain point when I can actually focus more on the strategy and not just thinking of, like I said, the fear of the money or not having enough capital and so on, which means it basically freed my mind to focus on the technical side. And we all love the technical side, right? We don't like the psychological, in most cases, we don't like the psychological side because it's a little bit more, we can call it spiritual, right? Some meditations and mindfulness and other stuff that will basically, we definitely need them, but it's much fun, it's much more fun to focus on the chart and actually reading it. So once I had those tools, the capital, the not risking my own money, the risk limitations that will block me in case I'm doing something wrong, now was the time for me to focus on the technical and actually crafting what I already had, but making it much better. And this is how this is how I came with the MACD strategy for me, I guess, because I'm guessing any one of us right now has his own strategy, their own unique way to operate. And of course, MACD been around before I was born. So I'm not inventing it. I'm not inventing something that it wasn't there, but I'm just taking it and implementing it to the way I see it, at least, or the way I understand the market, right? So there are a few things we need to learn when it comes to learning a strategy. We need to understand, like I said, the why, the what, and then the how. So the why in this case is why this strategy is supposed to work. What drives it behind the scene to make it actually happening in the market repeatably, and also literally will work X time out of 10, right? So in that case, when I'm trading, and I will show you in a minute my stats and all of those stuff that the trades that I made from A to Z, once I know that I'm trading with a specific strategy that has, let's say a 60% success rate, 70% success rate, it's easier for me to trade and take that decision. So I have enough capital, it's not my own money, I have risk limitations or parameters that will take care or block me from making mistakes. And I also have a tool, a technical tool, the strategy that I know I can rely on. Because going back many years before, and again, this is something that all traders will experience. If you just started trading, you will experience that. If you've been around for a year or 2 years, you know what I'm talking about. There is a way or a path that all traders will go through, and it will be basically trying different strategies over and over again. Now, in most cases, strategies will work, but us as a person, as a human, it will be hard for us to connect with that strategy and actually say, you know what, I trust this strategy and I want to focus only on that. It's very hard to do so. First, because you, as a retail trader, you don't have the resources, as I mentioned, the capital, the not risking your own money and so on. But also, once you see that the strategy is not working for a day, 2 days, maybe a week, you basically feel like it's not the right one for you, or maybe it's not working and you try a different path. You're going from a counter trend strategy to a momentum strategy to trend following, whatever it is. With MACD, RSI, ADX, we all been there trying to mix stuff together in order to find the holy grail. But once I know what's behind it, it's easier for me to connect with that strategy and say, and give myself the chance to prove, so the strategy will prove itself, basically. And by the way, if you have questions, feel free to drop them in the chat while we're doing that. And I'll answer them along the way or at the end. The what and then the how. So the how is obviously, or before that, the what. The what will be, what do I need to look for? What is it that I'm searching on the chart or before the opening bell to get to that point when I'm good with my strategy and I know what I'm about to do. So everything before taking that strategy, everything before actually clicking the mouse key and executing that trade. And the how is how I'm doing that, how I'm executing that trade, how do I manage the risk, how do I manage the trade, where do I put my stop loss, the take profit, and basically the execution and management of that trade. So this is something that we all need to ask ourselves right now. If you have strategies that you're working with, why it should work, really what's the reason behind it that drives that stock or that strategy to work, what do I need to learn and understand before doing that, and how the execution. So we all know those this chart, right? When traders or public coming in, getting that confidence once the price is going up, getting into that point where everything is wonderful in the world and everyone thinking the price should continue much higher, and then the drop starts. And this is the MACD strategy that I'm about to share with you is basically based on that. So it's based on the fact that the market will do the same thing over and over again. It's been doing that from day one. don't see a reason why it will change, even though we have more algos and AI or whatnot. The idea at the end is that us as human that really drives the market, we behave the same way as we behaved yesterday in a pattern. So price going up, reaching a certain point, a peak point, and then from that point dropping down and continue again and again. Obviously, when reaching that peak point, everyone is in a greed mode, thinking the price will continue, not taking the partials out, getting into a new position, although the price is super high. And at the bottom, a lot of the guys will will fear from getting into a position because the price is declining. And that's actually the point where you want to enter. And I'll show you today how I'm doing that. Hopefully you can take the tools and the idea from what I'm about to share with you and implement it to your trading. Again, doesn't matter which market you trade in, the concept will be the same. So you can easily trade the euro dollar with that, or the NQ as I've been doing, or specific stocks. Anything you want to do, the concept will be the same here. So we have, as we just talked about, we have the smart money on one side, institutional traders that will basically move the market, right? Investment banks, big pocket investors, hedge funds, and so on. And on the other side, we have, let's call it us, the retail traders, general public, and tip lovers. The concept of the movement between one to another will be always the same. Smart money would look for a way to convince the other side to sell them their shares, contract, lots, whatever it is. The only way smart money can move the price is by getting more liquidity from the other side. So there gotta be some way to convince the other side. It's just a negotiation, right? So the other side must be convinced that this is the time you gotta sell his position, or this is the time they gotta sell buy their position. So the idea is exactly as we just talked about. The fact, I'll go back for that. The fact that once we're reaching that peak moment, when the public, the general public, is getting more greed, this is the exact moment when the smart money can say, okay, I want to sell my shares now. When the greed is high and the public are buying, now that we can actually easily sell our shares, or the same way on the bottom. Once everyone is in a fear mode and thinking that the price will decline even more, they will sell their positions. Once they sell in, on the other side, they gotta be a buyer. In that case, the buyer will be smart money, hedge funds, and banks, and all of those guys. So once we understand that curve and understand how it works, where smart money gotta have someone on the other side to sell them or buy from them, once we understand that, we understand, or beginning to understand, the strategy. We are basically selling the top or buying the dip on a stock, or again, any type of asset in any type of market. And we're using that, what we're seeing right now, we're using that curve to basically work to our favor. So we're using the institutional traders, the ones that actually making money for a long time consistently. We're using them, or that strategy that they use, in order to make money and not fall to the other side of basically buying at the top or selling at the bottom. Okay. So in order for us to trade the MACD correctly, we need to find the one thing that is most important when it comes to technical, which is the asset that we are trading, right? If we take, you're probably all familiar with bull flag, right? Or bear flag, a pattern, continuation pattern that's supposed to show us basically continuation to the upside on a bull flag, right? stick and then a flag, and it should continue higher. But you can find those bull flag probably in any type of asset that you would look at. But if you're not using it on the right asset on a specific day, then the pattern is irrelevant, because a pattern is good only when you actually have it on the right asset. So when it comes to trading any type of strategy, you got to first find the right asset to trade on. Now, it could be, like I said, on stocks or Forex, but on the same specific day that you are about to trade your strategy, if it's not on the right asset, you're already losing or starting from way below zero, basically. So the first thing you want to do is find and scan for that asset. The way that I'll do that, or if we're talking about shares, will be either through websites like Benzinga, Seeking Alpha, bar charts, those kind of websites that will provide information about the stocks. Scanners, you can use the scanners of the broker platform, or you can use Trade IDs or TrendSpider or other platform that you like to use, or Finviz, for example, as a website. Or you can also create yourself a watch list. So you're going through and scanning, basically, let's say through Finviz. Once you find those stocks that are relevant for you, you put them in a watch list and then continue to follow them day after day after day. Or another option is actually looking for those stocks that you are familiar with or just like them more than others, and then you focus on those stocks. Either way, or a mix between them, will lead you to the assets that will be relevant when the time be. It doesn't have to be that today I might scan for today, but the trigger will start only in a few days. So I have the watch list, so I can go over and over again. So a few days later, I can find that specific trade on an asset that I was supposed to get in a few days ago, but because it didn't trigger, I waited a few days later to enter. So, like I said, everything good with a strategy will start, first of all, with liquidity. We talked about the big money or the smart money comparing to us, the retail. The only thing that the market cares about is liquidity. A right asset will have a lot of liquidity, right? This is why there are scanners in the platforms that showing us top gainers, 20 top gainers, 20 top losers. They, in most cases, will have the most liquidity. And we understand that the way that the market works and shift is by taking liquidity from one person to the other. So if the asset that you are trying to trade doesn't have that liquidity, no matter the best possible bull flag, like a textbook bull flag, won't work, probably won't work, because it's missing the most vital parameter within it, which means liquidity. So once you're looking for that, or first you're looking for that liquidity, you want to see an asset that can move, but also has a lot of liquidity, meaning a lot of volume when it comes to trading shares, that's switching hands between buyers and seller at any given time. And by the way, when I'm talking about the MACD strategy, and also in general, everything that I'm mentioning could, like I said, could be fit to other markets, not necessarily shares, but also could be at a different time frame as well. So I've been day trading a 1 minute chart, but I can easily trade an hourly chart. I will actually show you the trades that I made on the NASDAQ, and actually this happened on an hourly chart, mixed sometimes with a 1 minute chart. So the strategy will fit any time frame that you want to use. So you can do that as a swing trader or as a day trader. it's up to you. So like I said, the first thing, liquidity. Let's talk about this one. What will create liquidity? Try to answer this. In your mind, when you're looking at it, what's the reason for a liquidity to arrive? Try to answer that for a second. Because like I said before, once we know the why there is liquidity in that asset, then it's easier for us to commit to that process. I think in anything in life that we'll do, if we think about the why before the what and the how, it will be easier to commit to that process, and then in most cases it will succeed compared to others just by going to the how. So if you have any thoughts on that, share them in the chat. I'll continue in the meanwhile. So the thing that will create liquidity in most cases will be the news. The news, and also on the technical side, the levels. So news coming from all different angles. Obviously, when we all getting into marketwatch.com and seeing the headlines about Tesla or about other stock that will be relevant for today. Is it because, doesn't matter if it's because an FDA approved or just an upgrade or downgrade, a lawsuit, a new product, whatever it is, when it comes to the news, once it's there, it's easier for everyone to see that, which means everyone is looking to trade that, long or short. But the fact that there is news bringing a lot of attention, of course. So once we have the news, we have liquidity, we have the right asset to trade on. The other part will be the levels. So if we're using, like everyone else, technical charts, a lot of the guys all around the world, and also algos as well, will use also those levels, which means that basically they will create that liquidity. If we all looking at Fibonacci and seeing the 61.8 level, and we are watching it right now, and there are thousands of traders worldwide, including algorithmic or robots that trade in it, also that looking on the same level. Some will go short, some will go long. It will create that level, which means the liquidity that we're looking for. So these are the two things we want to work with. And again, in that case, it could be easy to use also a different strategy, not necessarily the MACD, but any type of them. You want to have liquidity. The liquidity comes from the news. If there aren't any news, there isn't any news on that specific asset, in most cases, it won't be relevant to trade. So it's important to remember that. And this is exactly what we talked about. So on level size, again, it could be from different time frames, but also gap closing. It could be supply and demand areas. It could be basically supply and demand. It's also historical data coming from the past. Resistance, a major resistance on the daily chart that was 5 years ago. If we'll get to that today, in most cases, it will react at least once before dropping down. It could be channels like a trend line or a channel, a trend channel, basically. It could be a lot of those elements that we all familiar with as analysts of a technical chart. So we have that specific trade, or we have that specific asset, and now we want to start building, before entering, actually building that scenario where we want to execute that trade. So we have a bunch of parameters that we want to go through before jumping into that trade. First, we want to mark those levels, right? We understand that on a specific level, a major level, we already have the asset we want to trade. Now we're looking for that level, and we want to mark that because we know that that level in most cases will react once reached. So we want to have it ready. We can set an alert. Some of you guys that have been doing day trading, maybe you will sit in front of a screen and just watch it until it get to that point. Or you can also set an alert and say maybe $3 or 30 cents before the level, just ring a bell, right? So you can use that and then build your watch list and actually use a daily chart for the levels. Or if you're day trading, you can use an hourly chart to mark those levels. And again, it could be that it will happen today, or like the case I mentioned before, which means that I marked the level on the same day, but actually the trade triggered only 3 days after. So once I'm setting alerts in the system, it's much easier for me to track them and trade them, if not on the same day, but maybe later on the same week. Sorry. Besides that, we have market behavior. Of course, we want to track that and understand what's the sentiment in the market, because you do want to have the market with you once you're trading. So if you want to go long, you want to see the market stops at a certain support level or break through a resistance. You don't want to see it dropping down, of course, because it will, in a lot of the times, it will ruin that trade. You want to use naked chart, meaning on the chart itself. At least I'm not using any indicator like EMA or exponential moving average or a VWAP. You can use that. I've been trading with indicators many years, VWAP or pivots or moving averages or whatnot. And as I continued to grow in my trading and my experience, I actually got rid of 95% of them. So I do use the MACD. And from time to time, you will see my screen with 200 EMA, but it's only an indication. It's actually only another V in my checklist, another mark in my checklist. But before that, I found the right asset, and then I analyzed the naked chart, but only then I'll add the MACD or the other parameters like the 200 EMA to just help me decide to complete my full puzzle picture. So naked chart, I'm looking at the volume, especially when it comes to stocks. You want to see the volume shifting hands basically, or increasing once we're reaching that moment when I want to buy the dip or sell the top. And of course, using that MACD strategy, or basically using the MACD to implement it to the rest of the parameters that I already saw. For the target, we want to use either major gaps. We close that gap. That's a great place to take my partials. A strong move to the downside against my trade if I'm buying the dip, so it's going rapidly against me. I'm sorry, in that case, it's a sell, so going up strongly, or a volume that is shifting, also showing me a shift hands between the buyers and the sellers. Actually, increased volume coming from nowhere will show me, will indicate that basically that something is fishy going on, and it might be a shift in the trader's play, and it's better for me to take my partials out instead of continue to hold that position. So that will be the take profit part, and the concept of the target in general, but also when it comes to the other side, the stop loss, we want to use that by risking, like in most cases, at least at the beginning, 1% when it comes to entering a trade. Also on the website, on the YouTube channel of David, Timing Research, you can find a video that I made on risk management. David, if you have it, maybe we can share it, and that will be a great place to start when it comes to understanding the risk management and trade management. and just realize how much do I need really to risk on which setup. We won't have the time to dive into that today, but if we'll have the link, it will be great. And let's go to the charts. I think we talked enough about that. In most cases, I don't like to do those slides. Prefer just talking about the charts. So I'll go with, let me start from here. Okay, first of all, that's my account. Again, the Fivers is an online prop or parent company that doing Forex and indices. And this is one of the accounts that I traded in the last few months. As you can see, I started with 40K, basically, reached all the way to 120, a little bit more than 120, and then had a nice drop in the last few months, like a few months ago. So I'm still up 60 plus, but this account was disabled. I started, once you reach in a target, you get in a new account. So I started a new account just a few days ago. And going over those trades, you can see that, first of all, I'm trading, in that case, I'm trading with the Fivers, I'm trading NASDAQ, only the NASDAQ. Although there are some buys here and there, but a lot of short. And this is why in the last 2 months or so, I barely touched the market because it was super strong to the upside. And although I'm looking to short it and selling the top, it was very aggressive. And as you can see, my last trade was very aggressive to the downside. So a losing streak. So I took a little bit of time just to give it a minute, or give the market a minute to recoup or start to drop like it did in the last few days. So these are all my charts here, all my trades here. I put them in TraderSync, one of the platforms. Basically, I'm trading journal. I'm guessing most will know it. This is without the loss of 15,000, the last 15,000. But you can see the stats here that showing the profit factor 605, the return, and with a winning rate of 68%, almost 69. And this is something that I talked about a few minutes ago. When you have a system that you know why it should work, it's easier for you to operate it, and then your success rate will increase automatically. And of course, I apply all the other stuff that I've been using to manage the trade besides just executing it. Of course, I'm managing the trade, and that also giving me a nice success rate. But the idea is understanding why it works, and then it will be easier to execute it. Of course, not my own capital, enough capital to trade with, and risk parameters that will protect me. Let's go to the chart and see my last trade. This is the new account that I told you about. I just started it like literally 2 days ago on the 22nd, and that was the first trade that I took. So it's right here. I closed it just before this webinar, but I took most of it here. Now, it was a small profit of a few $100, but the concept was exactly what I'm sharing with you right now, the buying the dip situation. So once I have a nice chunk of movement to the downside, I would look for a major support level, major levels, and then I'll buy the dip with the volume coming in. I'll share with you another chart, and we'll dive deep to that. You can see, let me put it here. Okay, you can see this channel. I'm on a daily chart with the NASDAQ. You can see that we traded with this channel for many months, almost 2 years, that we are traveling within that range. I talked about it many times before. And what we did lately, before the drop of today, what we did is actually broke through that, retest that, And in most cases, once reaching that support level, after we played with it so many times before, it will react to the upside, so it will bounce. I don't know from this point, taking out today, I didn't know obviously that it will drop or continue majorly to the upside, but I know that I have this case here, which in most cases will prove itself to the upside because a resistance will change direction to support. So once I have it done, I can go to the hourly chart. This is the NASDAQ hourly chart, and this is the line that we talked about. And you can see the strong positive diversion in the MACD. So price is declining strongly. That's the curve that we talked about before. There was a peak right here. Everyone thought the price will continue to the upside. The price dropping down. The fear is getting into a point where everyone wants to sell. When they're doing that, in most cases, it will be on a strong support level, as we see. And then I will dive in a little bit more and look for that diversion. Look at the MACD, and time is a little bit short right now, but looking at the MACD, you can easily see it increasing or moving up while price is declining. Now, a MACD, for those of you not familiar with, basically three EMAs, exponential moving averages, the difference between the 12 and the 26. So 12 EMA, 26 EMA, the difference between them, and the 9 that play with them. You can use the classic one. From time to time on futures, I will use a different one. But you can also use, that's the normal parameter, the default. So you can see that the price is declining, creating new lower lows, while the MACD is creating higher lows. That indicates basically that the momentum of the buyers for that moment, as you can see today, we are continuing down, but for that moment, the momentum of the buyers, the momentum of the sellers is getting weaker, or the buyers are getting a little bit more aggressive here. You can see the volume coming in at the bottom. Because it's future, it's kind of hard to see which one is higher, because a lot of them are pretty much high compared to obviously dead time, like out of the market. But you can easily see that more clearly on our specific stock when you trade in a specific asset. And basically you have that MACD, you have the drop reaching support. Once you have all those, I took that long right here, as you saw a second ago, and covered probably here or here until today. So that was it. I took that. This is the same chart, right? Dropped. I entered here after it bounced up and consolidated, and then took that to the top, and then covered the rest of it right here with a tiny loss. Most of my position I already took here, and like I said, with a profit of a few hundreds. And the concept will be the same, exactly the same when it comes to trading stocks. And there are, I'm going to give you, because of the time, I'm going to give you two that is actually one that was perfect for today, and the other one could be relevant, if not for today, then for the next few days. So just keep an eye on those and try to see, try to understand what's going on with them. So looking at LW, for example, obviously dropped like crazy today after the earnings. And you can see, going back, you can see a nice support level coming from in this area, a gap basically that was opened from March 2022. Below that, as you can see, the price continued to drop. So you can mark the next support level, which is right here. And you're not really looking for a specific point, like a specific price, but actually more of a, as you can see, a rectangle that I'm marking, because I don't really know if it will stop right on the dot or actually will play a little bit with the level and then do that. So this is the daily chart. I'm dropping to the 1 minute chart. And look what happened. I'm going to add the pre-market. And look what happened right at the beginning of the day. So the price dropped. This is the pre-market. This is the market. The price dropped nicely. The MACD created a massive move to the upside, doing those two lower highs, right? Creating a new low high. And then the price actually made the opposite. So the MACD show us, again, after you already analyzed it, understood that this is the chart you want to focus on, or this is the asset you want to focus on, and all of the rest of the stuff that I talked about. Once you see that, and this is the major support level, the close of the gap that we just saw, you can understand that the price should bounce up. Now, again, it doesn't mean that the price won't decline afterward. In most cases, in big gaps like this, it will, but you can easily take a nice move at the beginning of the day. Same concept is on TTD, dropping nicely, actually right now reaching that major support level, the gray area. I marked that before the webinar. Let's look at it from here. Okay, so price drop, and now it's reaching that point. It's the close of the gap from June, and you also have those areas of resistance, right? Resistance here, support, support, support. So this is clearly a place of liquidity. Buyers, sellers from all different angles will come and start to trade this level, either to the downside or will buy it. But basically, you can understand pretty easily that this is a place where a lot of market makers, a lot of institutional traders will try to work their way. In that case, when a price is declining from 102 all the way to 92, that's at least today, that's a drop of almost 9%. Most traders that will see that, or general publics that will see that will say, okay, the price will probably continue to drop. Let me sell my shares, right? Maybe they have TTD in their portfolio, and they watching the news. They see the 9% drop. They call in their broker or the banks and telling them, okay, sell those shares. Once they do that, this is the curve that we talked about. We are in that drop right now. The fear part is getting into a position where a lot of the public will basically want to sell the shares. Once they do that, it's easier for the other side, right? Because for every seller, there is a buyer. So the other side is basically institutionals that right now saying, thank you very much, I will buy it in that great price. So this is the level they will act upon. Sellers will come and drop their shares because they don't feel like this, because maybe they're on the losing side right now, or they don't feel like the price will continue to rise from here. Once they sell into the big money, the smart money, saying thank you very much, and take it and buying in a great price. So this is exactly what we can do. We can look at the chart, find this level. I didn't know that it will drop to this level today. So it's already reached that. It could have easily been happening for like tomorrow or 2 days from here. Drop to that level. From here, I will go to a few things. Either the MACD on the hourly chart, you can easily see diversion. Look at the lows. This one low, and we marked another new low. And when looking at the top, at the MACD, you can see that the price is actually doing the opposite, right? We have higher low comparing to the price. So a negative correlation between what the price and what the MACD is showing us. Once we have the level, obviously the asset, because of the news coming and dropping the price, and the MACD, I can go to the 1 minute chart, and I can see if there is another things that can help us to decide if the price will continue higher, will shift to the upside. And look what we got here, the high volume that coming in at the top of the level, on the level, show us again shift between the buyers and the sellers, which means that this could have been a great place to look for that upside move. Now, not necessarily that it will go all the way up and will close the gap. We need to manage the trade still, and we need to take our partials along the way. But in that case, we have the parameters that saying there might be a shift here. You can click the mouse key. Now, of course, if you have enough capital and you're not trading your own money, not risking your own, and you have the parameters that will cover and basically put you in a box and won't let you blow your account, then it's much easier for me right now to click the mouse key and make that decision, comparing to the fact that I'm trading on my own money that I saved for many years, and I don't want to lose right now the few $100 if it was my own capital, for example. And of course, depends if I have enough to obviously day trade because of the PDT rule. So this is like a nutshell of the MACD strategy. Again, just as a recap before we close in, just a quick recap. We're looking for the right asset, which means we're looking for news or levels. We're looking for that liquidity. If we have liquidity on a certain asset, that's the one we want to focus on. We mark the levels. We put alerts inside, so the system will alert us once we get in close to that level. Once we're there, we will look for that divergence in the MACD that will show us a different move compared to the chart. The chart will show us lower lows, while the MACD will show us higher lows. Looking for high volume coming in on a 1 minute chart if you trade in a 1 minute chart, if you trade in intraday, and then you can execute that trade. Like I said, risking the risk management in that case will be, thank you, David, will be in that link that you just that you can see on the chat right now. I spoke about the risk management, how to understand how much shares to buy, how many shares to buy, how much money to risk, and how to manage the trade correctly. I will gladly recommend that video. And that's it, guys. If you have any questions, feel free. And David, it's all yours.
Right. And yeah, I'll just add a voice note here at the end. For everyone, if you're watching the recording and can't see the chat, if you want to find that video of Michael's, just go to the Timing Research YouTube and type in Michael Katz risk management, and it should pop up easily. Or you can always contact me, and I'll send the link. So, all right, great. Thank you, Michael.
Yeah, it was great. Good luck, guys.